Microphone check and screen share check, please. So this is a quick summary of how our professional military looks at the various roles of teaching, coaching, and mentoring, or in this case, counseling. We counsel subordinates on performance. We coach in order to specifically focus on learning and improvement of known skills. And then mentoring is a voluntary relationship between both mentor and mentee that takes a look at some of the larger life cycle issues or the more holistic view of things and not so much task oriented. We had some discussions tonight in the Creativity 202 course about coaching as a skill and the different styles of coaching that can be entered into and what the different outcomes might be. So we talked about this tonight. And we're at about the halfway point on Creativity 202 with just amazing results. And the second half is even better than the first half because they've got a baseline and just some amazing work. There will be over 100 hours of recorded group sessions where people are discussing their direct experiences of doing the lessons and gaining their feedbacks and how they're applying it in life and to their trading. It is priceless just for those alone. I mean, the lessons are great, but the discussions are even more impressive to me. Pretty amazing stuff. That can be taken either as a home study course or as a guided tour, either individually or in a cohort. And we're getting ready to start up a new session in October. Seating is limited, so if you want to get on it, you got to get on it in October. If you want the guided tour of the cohort, it's starting in October. Otherwise, the next start point is January. Okay, let's take a look at the market 150. As soon as I can find my pen, that is. Hey, there we go. So in the market 150, about all we can say is it didn't break down much more today. It's still testing this crucial support level at around 364, which is the 150-day low, as well as the 5, 10, and 30-day lows were hit today. The 5-day range is still large compared to the 10-day range, which is large compared to the 30-day range. So this is really becoming quite a volatile compound critical state here. We'll see that evidenced by the large number of Godzilla patterns that are in play because they're all at the bottom of the 10-day, 30-day, and 150-day low, and the volatility is large. So that tells you this is extraordinary conditions, and we're likely to get big breakdowns or a nice rebound back to the PSAR around 390. So you're talking about a $25 move. That's about an 8% sell-off from here to here. And if that breaks, then the next move down looks something like this or this, starting the third leg down. So we have that to contend with. In the 30-day look back, so this zooms in a little bit more on. Here's the 30-day frame. This is your 1-day range right here. It opened, tested high, sold off, and then closed right near the bottom of the range. So here's your 5-day, here's your 10-day, and here's the 10 to 20 and 20 to 30. So this was I consider that to be one leg down halt. leg 2 halt. After that brief pause, you get 2 more legs down. So there's still another leg of this magnitude, which is 390 to 365. So there's a $25 downside move implied by a collapse of that. That would not be surprising. That's another 8% move. Not good. Um, the 30-minute look back. Here's your 5-day. Here's your 10-day, and each of these bars are now 30-minute. We're still working off of this, the collapse of this, what had been support, and then a sell-off. The rebound only got halfway back. If you take that as the return to fair value, and that's the bottom, it only got this high. So that's about a 50% retracement, and then it just sold off today into the close, and that's poised for a big breakdown. Now the upside would be, has to get through about 369 above the peak of the RL10 and the PSAR, and then the next one it will get to about 375 to rejoin. This acts like a big magnet, and we're priced to get to there. Everybody that bought down in here would say, well, that's a reasonable profit worth holding, which then creates some hesitation and some selling pressure. So it has to get through 375 to have a fighting chance to get back to 385 in this area. To get back into this region. So there's a lot of resistance baked into the cake, but really the 5-day high is the large resistance it has to get through. So this was pain and suffering, and it takes a lot of effort just to get back into this, and then the breakout from 390 back to 400 is the beginning of the all clear sign, you know. So this is really it can't get much worse than this until it breaks down, and then you'll see what worse looks like. But this I treat as a compound critical state. It didn't collapse panic selling, so there's that. Failure to fail further, that's something. And all it means is that there's a critical state to the upside for an intraday trade in bearish normal conditions. That's all I would treat any upside move as. Let's look at the sector performance now. Let's see what we can see. So we have our baseline here. The S&P was down a full percentage again. Weaker were diamonds and emerging markets at 1% and 1.2. The small caps were the weakest equity index at minus 1.88. Treasuries got pounded again, minus 2%. Now it's down to 103.68. Yields are up, but the capital price is getting smashed. The only index better than the S&P today was tech at 0.41, so that's faint praise for tech, but at least it was above the market. All right, the upside from the market, since we're right here, lithium technology 0.7 and 0.9, the FANGs at 0.46, Aussie dollar 0.21, consumer discretionary 0.23, and that's the cutoff line between gains and losses, with staples 0.07, Bitcoin 2.25, Ethereum 2.25, VIX 3.73. So that's still promising more pain and suffering tomorrow. There's a lot of guys betting that way. Individual companies that outperformed: Rivian and Coinbase 0.65 and 0.86. Tesla finally got back on the winning track at 0.25. Apple 0.23, Microsoft 0.20. So in terms of key leadership in tech, that's better than the S&P and better than the Qs and better than XLK, the S&P tech. You at least have Microsoft, Apple, Tesla, the holy trinity of conservative tech. I would call Tesla conservative because The faith that people have in Tesla resembles that of religious faith, which is a conservative tradition. So I see Tesla as a conservative tech play just because of its size and promise. An odd way to think of it, maybe. All right, to the downside, the S&P 1%, Arc Innovation 1.06, Clean Energy Uranium 1.3 and 1.35, Finance Materials Agriculture and Genomics 1.6 to 1.8, lumber 1.91, the other lumber wood at 2.2. There's your lumbers. Biotech 2.07, I should say. I'm trying to say. Blended commodities, energy, Mexico 2.3 to 2.5. Pain and suffering coming down. Commercial real estate, oil exploration, precious metals, oil, real estate between 3 and 3.7. Marijuana 4%. Individual companies, Devon off 4.25. Squarespace 3.79. PayPal, Alcoa, Nvidia, Robinhood, U.S. Steel, Cliff. So there's your metals. There's Cliff at 1.43. U.S. Steel at minus 2%. And Alcoa at 3%. So your metals all got smashed again today. So energy, metals, some internationals, all looking weak. Tech was the only bright spot, and that was a faint light indeed. Okay. All right, let's look at the sniper trade of the day. Where are we at? Here he is. So this is in Devon Energy. Energy was showing weakness. Here's your OR3. It tested here. I was about ready to pull the trigger, and then it recovered, and then the RL10 rolled over, got kind of a COTA 2, got the PSAR flip, standard risk. I took the edge of the dragon. I wanted to get paid 1. Then the PSAR flip happened, and the whole market started sliding. So there's the PSAR flip and a standard risk. Standard exit for about, there's 1, 2, 3. So that's like +1 here, +3. The resumption on the collapsing dragon gets me about a half. I elected not to take that one. I had span of control issues, but there was a payoff in here somewhere. I was committed to the downside only, so I didn't take that one, although that probably would have paid a little bit. The final trade was the PSAR flip again for about 1. So that's about a +5 day with this trade in the middle paying for the commissions. So Devon Energy sniper trade of the day. I had other sniper trades that were working for me today. These are all 5-minute charts, but things that were working included international paper on this breakdown, just following the PSAR all the way down. So international paper closed poorly. Brazil was a great one all day, starting with the Z3 pinch and then a breakdown just following the PSAR all the way to here. I'll mark those up and put them on Patreon for you. Don't want to cover them now. But the downside was just was abundant everywhere. So be aligned with the primary direction of the market. All right, let's look at the daily report. All right, go to dashboard number 1. We're still in bearish normal. Oversold on every measure. Risk Z rolling over, reminding us risk off and that these are dangerous waters, shark-infested waters. On the min pains, Johnson & Johnson, Merck, United Health, Procter & Gamble, and Walmart. That's your healthcare plus the nation's grocery store. Max pains remain Alcoa, ExxonMobil, Disney. That's the tail of the tape right there. Handful of dojis in the Dow. A ton of 5DDs. So what I'm very interested in a bear normal, the 5DD is still a reasonable upside trade, but I use that for swing trading 1 day at a time. So I'm looking for the nice payoffs in here. And if I can get an intraday trade on them, I just take it and don't hold overnight risk. But I'm also very interested in the 5DD failure pattern as a swing trade. So if we had 5 lower closes, 4, 5, and then today's low gets taken out, that's a swing trade to the downside in the 5DDF, as we cover in the advanced swing trade course. That is a powerful force for good. On the NDXs, what I want you to notice is the just how many symbols are breaking down on the 10-day, 1 month, 3 month, and 6 month lows are all getting shattered as well. Lots of things to look for there. If you took a look at Ken H's swing trade frames to the downside, those paid off enormously today. So his work on the weekends is setting you up for success if you're willing to do a little due diligence. Now, in the ETFs, the collapses are even more prominent. Take a look at all the things breaking down on the 6 month lows, as well as the shorter time frames as well. And so many are on a auto framer that you can't catch them all. The Qs were one of the few brighter spots today, only down 0.2. Staples were strong on strength in like Walmart and the farms, but otherwise Brazil and Latin America, which had been leaders, both collapsed. Oil continued to be weak, as was oil exploration. So know your trends, follow your trends. If you're going to have a bias, at least make a decision on the basis of the larger trend and the path of least resistance. All our goodies are at the top of the auto framer: Alcoa, Cliff, U.S. Steel, Disney, 3M continues to be just an amazing payer. And even the S&P is at 5.7 to 1 on the auto framer. That's what you need to know. Diamonds, 6 to 1. So there's some, the spring is being compressed. Just don't know where it's going to jump off the table, up or down, but it's going to be a big move when it breaks. Only 2 squeezes today, 3M and Alcoa, so they will both be on my radar for second positions. So I want to try to get an intraday position on them. Then if they break out of the daily high or low, I'll be looking to double up on the position and take advantage of their range compression. The regression line fractal framework, for those following that advanced swing techniques, is highlighting some opportunities here in DuPont, Intel, and Pfizer, especially at better than 8 to 1 and 7 to 1. Oof. And then on the excessive relative strength, Disney, Tesla, Walmart, JP Morgan offering some amazing opportunities. Sniperville here. It's a Godzilla market. That's the boy. That's how we compute it. He's enraged. Everything that is green and green is just smashing through Tokyo with major payoffs on the Godzilla. All of these paid well today. Um, Inside the tactical symbol set, commercial real estate, wood, marijuana, the lumber, the other lumber, I should say. The Russell should be on your short list as the broad index that's really benefiting from Godzilla. Alcoa, with his little squeeze today, is still in a Godzilla, so he's ready to go. That's the pattern to be emphasizing right now. Very few fence sitters and fireworks because of this broad weakness. And I would be more focused on the volatile ones, the ones that are already enraged, where I'm looking for green and green. And what you especially want to look at today, I think, is large Z-scores, like better than 2. That was a huge move in their international paper. That's why I was on that one early. PEG had a 3 sigma move today. So find the movers, continue to exploit. Those are deeply in play. Tactical stats for the snipers, for our tactical symbols, and then the broad. Mark, you don't need me to tell you that everything is in the winter. And on the multi-time frame NDX, look at these breakdowns. Oh my gracious. Intel just can't get out of his own way. And Squarespace, like we need more financial service geniuses. But look at the internationals. Europe, Eurasia, emerging markets, Japan, all getting crushed. No safe havens. With the exception possibly of these pharmaceuticals. How long can they resist? I don't know. And Walmart is not bad. Not only is it always darkest before the dawn, it's also darkest just before the lights get shot out. There's nothing healthy about this unless you're such an optimist. All you can say is, well, it didn't have an enraged downward move on a Monday like these were. At least it didn't do that. That's the only comfort that you have. But you can see we are certainly at extremes on slope and percent stretch. And notice that when it does reverse at those levels, it takes time for that sell-off it doesn't go V bottom and up. It takes some time where it doesn't quite get as steeply down and then mumbles into an upward move. So we're more like at this range where it is just getting crushed. We haven't seen much of the slowing at all, unless you want to count that as temporary slowdown. But I'm not persuaded. But then I don't have to believe. I just have to follow the price. We're starting to move towards volatility in terms of the standard deviation of price, and then the slower one to change is the ATR percentage, which just went above the long-term average and is moving steadily towards volatile. So that's sort of the last stage of this market. Remember, this sell-off has not featured a volatile downward market. This is just bare normal, the meat grinder. We have not hit the emergency panic button yet. And you wonder how much more it'll take, because the slope of the RL30 is almost at 4 sigma. And the RL10 sigma is down there at 4. And the 90 has just started to roll over. Oof. You know, the last time it was like this, the 90 had just started to roll over here. The 30 dropped down to 3 sigma, and the 10 was down here. So that's where The last time the market was kind of in this condition, you still saw another $40 sell off from here to here. That's a minus 10% move. And then if you said, hey, here's where the RL30 also, or the 90 also rolled over, and the 10 and the 30 were at extremes, was right in here, and you had another 10% sell off. So this by no means is a healthy condition just because it's at this support level. If this breaks, there's another 10% baked into the cake like nobody's business. And there are a number of global news events that could trigger that pretty easily. The pound and the yen are both getting murdered. Putin's getting desperate. Biden is still Biden, and there's no hope. And we're going to get into the silly season in the next 40 to 50 days. And the typical news cycle has featured lots of October surprises that have been shocks to the markets. So there's no stabilizing force in the next 60 days until we get through the election. So this is as chaotic as you could want it, and this emphasizes the short-term intraday opportunities in either direction from compound critical states. And that's what I want to say. That's where you need to be. Otherwise, standing safely on the side in cash. Cash is looking like not dumb right now. Traders have about $5 trillion on the side in cash waiting for this whole thing to settle down, and nobody wants to deploy that before November because it's real unclear about will the Senate or the House flip at all, and that has huge implications for short-term markets. So it looks like another, like Groundhog's Day, another 50 days of just pain and suffering and directionless mumbling from the White House and from the economy written large. So a 10% sell-off would not be surprising at all. On that gloomy note, let's take a look at the traders today. Here's Constantine with the gold versus the dollar. Oops. Why is that? Okay, sorry about that. Yeah, let's try that again. Oh, sorry, gotta plug my pen back in. Sorry about that. So he normally trades that on the fives. He monkeyed around with the 2 and the 3 minute and got chopped up a lot in here. And shifted back to the 5 minute and found his normal standard PSAR flip after a double top and crushed the minimum manageable risk box for 6.5R, which covered the minus 2.5 of chopitude that he was in. So netting 4 out of gold. What I like about Constantine's effort is he focuses on what's working for him and continuing to do the studies on the lessons in foundations, and is signed up for the pilot on the advanced systems development, the applied systems development pilot we're doing with Phil and Griff, and that's going to really sharpen his toolkit. Excited to see what he does with that. It would be worth taking that course just to work with him. Just saying. So here, notice he's got a come on. He's got a compound kata 2 here for when the U.S. session starts. PSAR flip, buys it with a minimum manageable risk box, standard exit 3.3 on the dollar yen. So plus his other 4.5, that's about 8R for the day on that one. And then finishes up with 5R in crude, West Texas crude on the 3-minute. This is an owl all day because you have a strong upward move, P1, RLXD, Dragon rolls over, 30 rolls over. That's an owl all day long, which, interestingly enough, is the owl, the advanced owl pattern workshop that Phil and Griff put together for not TradeStation, for TD Ameritrade. Is a superb course, and getting good marks from the folks who have taken the course already. They're reporting very favorable results. And so anyway, there's another 5 in the usual way, whether you take the early or the later exit. So that's about 13R for Constantine, looking pretty good, dude. What I like is those exits. You can see how they map to the MACD histogram. So here's where winter takes over, and that followed by the collapse. And then as it starts to settle down and stall, that winter becomes spring right about here, and now the edge is over. And he gets the fat move during the peak of the winter. So that's really good timing. Good alignment. Well done. Tim, let's see, about scratching here in the crude on the 3s. Starts trading here. There's a COTA 2 right there. And on that one, I want you to take that exit. When you climb up the stairs and then it peaks and then rolls over, this little RL10 crossing the baby dragon, that's where you get out at the edge of the dragon. So you're long here, get out there, and that would pay you. Then this is a good PSAR flip. That's a good exit. I wouldn't be offended with a re-entry here, which would have probably scratched. Quick loss, quick scratch, and basically flat for the day. That's the one that got away. And not much directionality in that one, but enough to have made some money on it. This is the E-mini, and this was choppier in the Euro session where he's working on. I like that one as a collapsing dragon. I'd like taking it at the edge of the dragon. Like if it starts failing immediately, I like it at the edge of the dragon instead of waiting for the PSAR flip. And then I like that one as the reversal off that double bottom. This one, when you're that far in the money, you have to at least get out there at the edge of the dragon for your no lose plus dinner for 2. So that you don't want this one to be in the money and then lose money on it. So quick payment, re-entry could have been here instead of here, and then this is sticking around waiting too long. You're believing in that one too much. So I think you need to relax a little bit, but we're still all right. Woj with Devon and Tesla, his standard plays right now. Really starting to hit your stride. I need to see your histogram. So here is the shelf that broke. So there's a collapsing dragon. Here is the collapsing dragon entry here because you got lower highs. And when it crosses the dragon, you can get it or at the PSAR flip rather than here. And then instead of 0.2, and then instead of giving back almost 1, we should be taking the 1, 2, 3 entry at least. And we should make more out of that opportunity. On the other side, big gap down in a reversal. That's the OR3. Great entry, great exit. Here's your re-entry. Dude, come on. Good scratch, and there's a re-entry. We should be crushing that. Here's your PSAR flip. That's a good one waiting for the VWAP. I'm not offended by that, but that's certainly a trade you can make when the rest of the market is getting smoked. Got paid for 3.2 and zero point 0.2, so that's 3.5-ish for the day. And we should have had more out of this one. Could have had more out of that one. And then this is XRP versus the dollar tether. And not much, okay, quick loss, not much follow through. So micro payments. Missed the PSAR flip at the VWAP. Oh, we got to nail that. That is sort of that's everything you expect the VWAP to be. There was some sharp move against it, and then this painful grind all the way back up, and then it can't even stay on the far side at all and starts to fail. You know it's coming right back to here. And you find these major support levels. That's how you build. That's how you build your price ladder to the downside. You find these turning points, and you say it should get to those. And if it breaks through that support level there, that's what happens immediately. That's why you want to know where these support levels are, because when the ice breaks, everybody falls in and pain and suffering. And then all it does is start that PSAR climb and COTA 2 climb all the way back, and then it failed. You should be short right here and short right here because it is rejecting the VWAP. Still, we'll take 5 for the day. Nice work. All right, that's everything I got for you today. We'll get this published and posted, and off we go. I would just tell you, we're going to get in. We're on schedule to be interviewed by one of the top 25 business podcasts in the world in the near future, and going to be pushing the creativity and sniper trading courses hard. And those are going to fill up because we're doing that with coaching. And so you may want to get in while the getting's good. I'm just saying. Take good care, guys, and we shall see you tomorrow.